Moving on, we move to the finale of our day, and we're very lucky to be joined by Luke Johnson, who will share his insights and knowledge from his experience of building and floating successful businesses, most recently Patisserie Valerie. Luke founded private equity house Risk Capital Partners in 2001 with Ben Redmond. He studied medicine at Oxford and subsequently joined the investment bank Kleinwort Benson as an analyst. In 1992, he organised the acquisition of Pizza Express and floated the business on the stock market at 40p. And as chairman of the business he was chairman of the business until 1999, at which time the share price was over 800p, and the business had a market cap of over 500 million. So I guess he knows what he's talking about. He's been there, done it. He's also an investor in the small cap broker Arden Partners and a regular contributor to the Financial Times. So please join me in welcoming Luke Johnson.
Yes, I should say I don't really know what I'm talking about because people are now valuing Pizza Express at £1 billion. So there we are. Anyhow, as you heard, I have been involved in one form or another with the stock market since about 1983. I was a stockbroking analyst early in my career, covering media and smaller companies. And later on, I jumped the fence, if you like, and went from being a advisor to, or an agent at least, to principal, and became involved in various public companies. Pizza Express was one, My Kind of Town was another, Tops Tiles was another, Night Freight was another, and various others. Some worked, some didn't. However, in the last 10 years until very recently, I was involved almost exclusively with private companies. I was running a boutique private equity firm, and I had sort of opted out of the stock market, if you like. That did all change in May because we took public Patisserie Holdings, which is a business I've been involved with for 7 years. We raised £80 million with Canaccord, and touch wood, so far it's gone okay. I mean, obviously very early days. I'm always saying to people, you know, going public is the start of the journey, not the end. I think a part of the reason I did it was because I've written about this, saying that the purpose of the stock market at heart is to, I believe, raise money for industry, recycle British savings into ideally British, or at least companies that are employing people here, thereby creating jobs and prosperity. And so I felt, in one sense, I should follow my own advice. And so it seemed to me, in all the circumstances, that the right thing to do with Patisserie Holdings, which is a business that is growing, is to take it public. And so for me, it's going around the same thing again, but a couple of decades later. I think that the stock market is a vital part of the entire capital markets, and in particular, new issues. Because I think if the stock market's sole purpose is trading second-hand shares, that's not really what it's about. So new issues are vital, and in particular, obviously, backing earlier stage growth, smaller, mid-cap companies. And I think that's clearly what the Quoted Companies Alliance is about. I think it's a very worthy, important cause economically and socially. I think you only have to look at a couple of issues ago of Fortune magazine, which is refers to America, but I'm confident the facts remain true here, that for the Fortune 500 for 2013, their profits grew by 31%, which is more or less an all-time record. Jobs growth for the top 500 companies in America was about 0.5% in the same year. So in other words, the big companies create no new net jobs at all. Okay? They just don't. All the stats show that the big job creators are in exactly this space. They are what the economists call gazelles. The magic 7% that are serious, fast-growing companies, many of them private, but some of them public. And many of the private ones could go public. And I am very hopeful, and I say I'm eating my own cooking in this, that this recent revival of the new issue market is on firm foundations and will endure. Obviously, over the last dozen years or so, there have been a number of revivals of the new issue market, and all of them have fizzled out. And to a large degree, I think it's fair to say the new issue market overall has been quasi-moribund in the last decade. However, as you will be only too aware, this year to date, the stock market has raised almost £14 billion for new issues as against £3.6 billion last year, same period. That's the first 5 months. And you'll be familiar with all the names. And, you know, it's a shame some of those aren't trading at a premium, but I personally think it's still okay. Clearly, the market and whoever it is, the brokers, the institutions, the powers that be, must maintain discipline. They've got to focus on advising quality and value in terms of the issues they promote. It's inevitably very tempting for the circus to gather around a company and offer to value it at whatever the company asks in order to win the mandate, as long as they think they can flog it. But I think if their heart's not in it, if they fundamentally think that the thing is overvalued and that it's too early to float or inappropriate to be a public company or for whatever reason, then it's a very short-term hit-and-run game. You know, they might bag a nice fee, but I think ultimately, as every stockbroker knows, there's actually quite a small pool of institutional investors at heart playing in this space, no more than 100, possibly really only 50. I'm not talking about, you know, very short-term hot money that comes in and out of new issues. I'm talking about the core small and medium cap investors in the UK. And therefore, if you burn them, if you stuff them into bad companies at the wrong price, you'll be off the list, the new issue market will fizzle, and it's all over. So I think, you know, it is about making sure that things aren't overpriced, and that, you know, the right quality of issues are taken public after due and careful process. I don't just mean ticking the regulatory boxes, but I mean thinking very hard about, is there a good reason for this company to go public? Is the board suitable? All the rest of it. No company is ever perfect, but we all know the difference between a good and bad quality issue, I think. Because the truth of the matter is, unlike 10 years ago, and particularly unlike 20 years ago when we took public Pizza Express, the private equity is a very serious contender in the small mid-cap space to quoted investors in terms of providing capital for small and mid-sized companies. There is a wall of private equity out there, what they call dry powder, billions of it just in this space. I think that's very helpful competitive tension, because I think it does, you know, keep brokers honest, if you like, but at the same time, I think it means if the new issue market fails, then the private equity is there, and that's where the entrepreneurs and the businesses will go for funding. And I think that will be a great shame, because I think the very public profile of smaller growth companies, the visible demonstration as reported in the media, and companies where individual investors can potentially have access to buy those shares, is crucially important for the whole sales pitch of capitalism and free markets. I do think it matters. And I also think that it's very important that savings are rationally recycled, if you like, into you know, British companies quoted here. For good or ill, the vast majority, they don't publicise this, but the vast majority of private equity money is not UK money one way or another. It's from Canadian or American or wherever it is, pension funds and insurance companies. and therefore it isn't necessarily British ownership of these special, interesting businesses. I mean, clearly we're at a good point in the economic cycle, and that has a big bearing on why the new issue market is so robust. We have very low interest rates, we have a strong currency which suggests people want to invest in Britain, we have the highest GDP growth in the G8, rapidly falling unemployment, improving investment, and so forth and so on. So overall economic conditions are tremendous, the best they've been for 7 years or so, and that's very helpful. And I think there are many dozens, if not hundreds, of companies that in the next year or two will be suitable to float. And I hope many of them do. I hope they're encouraged by the new issues that have gone before them. I hope they see the journey as worthwhile. I hope it becomes as fashionable as it once was when things like the USM existed. And these are companies that might be owned by private equity or they might be family owned, because I think they provide fresh excitement for the stock market. And as I say, I think at heart that is what it's for, to provide new, fresh capital, development money for businesses to grow and expand and to foster growth and jobs. It's quite interesting for me comparing the journey actually taking Patisserie Holdings public this time round as opposed to in '93 when we took Pizza Express public. It wasn't nearly as stressful as I feared. I mean, I think that's partly because the really scary thing was when I took, with partners, obviously, Pizza Express public in '93, I was normally the youngest person in the room, or, with my partners, the youngest people in the room. This time round, I was the oldest. And I was able to delegate rather better than I did then. And I think that actually, although in some ways it's more bureaucratic, there's more regulatory burden perhaps, nevertheless, the system for us worked very well. Perhaps we had great advisors. Well, I'm sure we had very skilled advisors, but we were lucky, I don't know. I found the whole process relatively smooth and seamless, and the administration and the burden, not too wearing. What I also found was that fund managers in general were really sharp and much more on the ball than I was expecting. And I think in a way, it's always quite to meet 60 or so very clever investors who grill you about your business, forces you to think about your business, and it's a sort of fitness test in itself. And I think it's good for any business to go through that, actually. I mean, I think generally speaking, private equity and the stock market and all its constituents can learn from each other. I think the one group of investors I would categorize as slightly different, and perhaps I'm not so interested to learn from, are hedge funds. I think this has been one of the problems, speaking personally. It's a very subjective view of the last 10 years or so in the stock market, in that I think there have become a certain group of much more short-term investors have had a disproportionate influence on the stock market because they pay big fees and so forth and so on. And I was, for 6 years, the chair of a pension fund, Channel 4, quite large, and we used to get pitches regularly from all sorts of hedge funds. And it was extraordinary to me that when you'd ask them, what's your typical holding period for a share or an investment, they would talk in months. I just don't think that's investing to me. I think that what industry needs generally is patient capital. And so certainly if I was ever asked by any institutions when taking Patisserie Holdings public, and they'd say occasionally, what are you looking for in investors? I'm saying for people who are going to take a long-term view. Not that we're going to disappoint or whatever we hope, but that we want supportive people who will be there for years rather than quick 10% flip in the price and they're off. I think that is not helpful, personally speaking. I accept it's part of the system, but I think that, particularly at this end of the market, the key players are the big, pension funds, insurers and institutional investors who are there for the long term, who are very seriously committed to smaller and mid-sized equities, get to know management extremely well, know their stuff, take it seriously, and accept that, you know, it's often a roller coaster ride with companies of this ilk, but that can create opportunities. I mean, I think there are still plenty of challenges to most private companies in going public. I mean, IFRS was a surprise to us, all its implications. Obviously, you know, the inevitable rules on disclosure and what have you. And there are times definitely when you feel there's form over substance with regards to the bureaucracy and regulation. I mean, for example, I think one of the more fatuous issues that we face is stupid rules on taxation over things like options. I'm very pleased to see that the Quoted Companies Alliance, as one of its objectives, is trying to propose reforms for entrepreneurs' relief, so it's available to all. I think that's an excellent idea. I also think, by the way, their idea of pushing for the development of a UK index that measures companies' contribution to the UK economy would be fabulous if they could do the research and show just how many jobs are generated by this sort of business vis-à-vis the big ones, because I think it really matters. Because I think, you know, it's an intellectual argument as well as an economic one one's making always, i.e. capitalism can create jobs, free markets do deliver value to the consumer. This is the heart of it. It's about innovation, it's about growth, it's about prosperity. And I think the stock market plays a vital role in that. And I think for those critics of the city and those who think of the stock market as a casino, this is the way to rebut their ignorance. And, you know, the case needs making relentlessly. I think sometimes there can be a complacent assumption that it's obvious and we don't need to explain ourselves. But actually, I think more bosses of companies and more professionals from the city need to go out there and stand on platforms like this, perhaps not to this sort of audience, but to more mainstream and political audiences in the media, and bang the drum for growth, the stock market, free markets and capitalism and so forth. Because this is the heart, the beating heart of it, really. So I think, to conclude, I'm very pleased that it appears to me the stock market in the revival of the new issue markets has rediscovered its role and purpose, channeling savings into British industry, because British industry needs permanent capital, which the stock market offers. Ultimately, I have to admit that all private equity is temporary by its nature. It's not momentum investing because one's talking about 5 or 7 years perhaps, but it's still not permanent, whereas the stock market offers a very serious permanent form of capital, and I think an ultimate home for many big businesses that are too big to be owned by individuals. And I think it's terrific because I think it creates extra interest in the stock market outside of the normal institutional web. And I think, for example, if it were made easier, another bit of re-regulation or deregulation perhaps, if it were made easier for individuals to invest directly, somehow or other, to make it more cost-effective so that the public can participate. The number of conversations I had about that with Patisserie Holdings, what will be the cost and delay of trying to open it to the public, and it just wasn't worth it. And it would be nice if they could somehow fix that. That would be great. Anyhow, I think the work that the Quoted Companies Alliance does is to be applauded, and let's hope that the IPO revival continues. Thank you very much, and I'm happy to answer any questions if there are any. Yes, gentleman there.
Gavin Oldham, thank you very much indeed. You spoke eloquently about new issues, and just at the end there, you spoke about Patisserie Holdings and why, or rather that you hadn't got it out to personal investors, who of course provide the bulk of liquidity in the secondary market. We know why that is, because basically you only require placing if you go to institutions, whereas you need a full prospectus when you go out to personal investors. But of course, those same personal investors will be buying those shares straight away after the issue in the secondary market without having seen a prospectus, because there wasn't one. So I'd just like to you just to explore a little bit further, in the light of his experience, what you think of the prospectus directive and what we might be able to do to enable personal investors to have access in the primary market, because they are the people who provide the secondary market. Let me declare an interest. I run the Share Centre, Gavin Oldham, Share Centre and Share PLC. And so, and I'm also chairman of the wider Share Ownership Council.
Well, I can't pretend to be a technical expert on the prospectus directives and rules. Certainly, you feel that in this age of digital transparency, there ought to be a way in which all the relevant information could be online, and therefore, as long as investors somehow showed they were sophisticated, if you like, they ought to be able to access the same level of information, including presentations and everything, that institutions do. Accepted they might not be able to get a one-to-one presentation by management, but nevertheless, certainly in terms of the details of whatever's shown to those on a roadshow ought to be available. I guess, it's the usual battle between, the civil servants and the regulators who are forever trying to balance, protecting widows and orphans with open, available access. And I don't have an easy solution, but I certainly feel that if more people were easily able to buy shares directly and access the same level of information as every institution, which technically they should be, then that would be a very good thing. I guess quite a lot of investors are able to access new issues through private client brokers, but it's not the ideal solution. Any more questions? No? Okay, well, thank you very much indeed.